What's happening, everybody? It's your boy Creative. We are back at it again to create something great. Today we're going to be working on a QQQ breakout strategy for zero DTE options. Zero DTE is telling us these are same day options, right? So if you would give me a moment, I am checking my levels. I want to make sure that we are Gucci because there are times when I trick myself. So my levels are telling me I'm Gucci. Let me just make sure. All right, my levels are telling me I'm Gucci. All right, so today we're going to be working on a QQQ breakout strategy for algo trading. And again, algo trading is just another way of saying, hey, we're going to have a line of a code, right, that we're going to train in order to trade for us, right? So we're not hand trading. We are using bots in order to trade. So you're going to see us go from creating the strategy, right, being able to back test it, and then potentially create the bot depending on how much we get done today. So I'm going to be using Cursor, and within side Cursor, I'm going to be using Claude Code, and then using ChatGPT to flush a couple of ideas out. But I think where I'm going to start is giving you a synopsis of what an option contract is, right? And then once we talk about an option contract, we're not going to go too deep. We're going to go straight into our creating the strategy and then being able to start coding. So I've only been coding since April of this year, right? So I'm new to coding, so that's why I'm going to be using AI to be able to assist us, right, when it comes to creating the code, right? And I'm going to explain each part of the process. And I love AI because it does help us bridge that gap, right? Now there are still there are things that I know and I know how to code, right? But things that I don't, we're going to be using Cloud Code and AI to be able to assist us with that. All right. Now, but when it comes to stocks, options, trading, that's something I've been doing for years. So I know that, right? But when it comes to being able to marry that with coding, still something new. So here at Creative Coder, not only do we do algo trading, we create AI agents, we do machine learning, so all various sorts of things. And I want you all to be able to see my process from start to finish. All right, so that's enough about that. So let's talk about options, right? So an option contract is like a coupon. This enables us to be able to buy or sell a stock at a fixed price. Now that fixed price is what we is, in other words, a strike price, right? So a strike price is what we're betting in that option contract that the underlying value is going to be once it expires. So that certain date that you see is the expiration date. We're going to be dealing with zero DTE expiration date, meaning these are dailies. These are option contracts that expire on the same day. And the reason we're using a breakout strategy, right, is because we want to catch when QQQ, and I'm looking at QQQ at 1 minute charts, right? So we want to catch when QQQ is on the verge of being able to either break up or break down, right? So we're not biased, or not only looking for bullish moves, right? Bullish meaning that we think the price is going to go up, but we're also looking for bearish moves within this strategy as well. So the strategy is not going to have any directional bias within it, all right? So remember, with every one option contract equals 100 shares. So 100 shares, there's one option contract. I don't know why. That's just what it is. 100 shares, one option contract. So there's two main types of option contracts that we're going to be using today. We're going to be having a call option contract, right? And a call option contract is the right to buy a stock at a set price. We're buying a call option is because we think that the market might pop. We think that the market might go up, right? Now, a call option equals that we're bullish, right? And is that we think that the price slash market might go up, right? So when stock prices rises, call options go up, right? So you see that correlation there? When a stock pops, call options go up. So let's talk about the other side, right? We have put options. So with a put option, it is the right to sell a stock at a set price. That set price being that strike price, set price being a strike price, right? Set price, set price. And we think that the market might go down, right? So put options equals that we're bearish. That's why you see a little bear here. And we think that the price slash market might go down, right? So when the stock goes down, put options go up, right? So let's go jump into ChatGPT, and now we're going to talk about our strategy, being able to come up with the framework of our breakout strategy. And then once we come up with the framework of our strategy, we're going to hop into our code editor here. And our code editor, we're using Claude Code. Nice blank canvas, so we can get this started. Again, you're all going to see my process. I'm mainly going to be using Python. Python is what I learned. I do know R, I do know Rust, I do know JavaScript, I do know C. So there's a couple other codes that I do know, but Python has become the one that I primarily use when it comes to being able to build these algorithmic bots, right? Trading bots for option trading. So let's keep going. So, oh, let's me give you a brief synopsis of QQQ, because I already have it, and I don't think most do not understand QQQ. So let's talk about QQQ real quick. And the first 10 or 15 minutes of every stream, I like to call this office hours, where we're going to be talking about a little bit about the strategy, right? And then any prelim or preliminary stuff that I feel like you all should know before we actually jump into it. So QQQ, right, is a big basket. Let me pull it up also, QQQ. My fault. I should have had this. So we're going to explain. Don't worry. You're going to see what I mean here. So you can actually. All right. I'm going to get back to that. So QQQ. And let me, to make sure, I'm pretty certain that you can, but I just want to just zoom in this one more time. All right. So QQQ is like a big basket of the 100 biggest tech companies in the US, right? Apple, Microsoft, Amazon, NVIDIA, Palantir. So let's go look at it. And this is QQQ Holdings as of the 25th of October, right? 2025. You see NVIDIA, Apple, Microsoft, Broadcom, Amazon, Facebook, Tesla, Google, and then YouTube. Google, YouTube. So you see Alphabet is Google and YouTube. Netflix, Palantir, Costco, AMD, Advanced Medical Devices, AMD, Crisco, Micron, T-Mobile, Shopify, so on and so forth, right? So you see QQQ is the top 100 biggest tech companies in the US, right? Non-bank companies. QQQ is an ETF. What do I mean by ETF? It's an exchange traded fund, right? So that's just a fancy way of saying it allows us to be able to bundle all of our stocks, right? So we can purchase QQQ, so we can be invested in all of these companies rather than having to purchase, I want to go buy Apple, Microsoft, Amazon, so on and so forth, right? So QQQ enables us to be able to bundle all of the stocks in one, so we don't have to. I was hearing something go off. All right, never mind. I was hearing something. Let me just make sure my levels are Gucci. So QQQ enables it to be able to buy the ETF, and that ETF invests in the 100 top non-bank companies, the biggest tech companies in the US. So QQQ, in essence, allows us to be able to be invested in all those companies without having to buy those individual shares, right? So QQQ is an ETF. When you think of an ETF, think of a quilt. Each patch within the quilt is a different company. So that's QQQ, right? So let's keep going. So QQQ is traded on the NASDAQ. It is not traded on the New York Stock Exchange. Let's talk about the difference between the NASDAQ and the New York Stock Exchange, right? So the NASDAQ is the national, there's going to be a bit redundant about this because there was one time I was talking for a while. I was like, bruh, my mic wasn't even on. So the New York Stock Exchange is a fancy old building where people used to shout out trades on the floor. It is the oldest and biggest stock exchange in the U.S., kind of like the OG of the stock market, right? It is located in the New York, right? More traditional, older companies like Coca-Cola, Nike, J.P. Morgan, McDonald's, so on and so forth, right? It is a real trading floor with people and computers, and companies must meet very strict rules in order to get listed. So NASDAQ, or the National Association of Security Dealers and Automated Quotations, or NASDAQ, right? It is the techie modern cousin of the New York Stock Exchange. So QQQQ, I said too many Qs, triple Q, right, is traded on NASDAQ, right? So let's keep going. So it started out completely electronic, no shouting floor, just computers and networks. There's no physical trading floor. It is all online. Lots of companies like Apple, Microsoft, Amazon, Google, Tesla, right? We saw one of the holdings or one of the ETFs or assets that are traded on the NASDAQ, right? NASDAQ has thousands of them, right? We're just picking one. And the reason we're picking QQQ is because of this liquidity. And liquidity is basically telling us, excuse me, that it is easy for us to be able to buy and sell the underlying option, right? Easy. And it's not hard for us to be able to buy and sell it, right? And that's going to be important, especially when it comes to zero DTE options, right? Options that expire on the same day, because you don't want to buy a call contract and be stuck with it. What's the point of that? It's not like we're trying to buy those 100 shares. What we're aiming to do is to be able to grow our capital, right? Because one of the things I want to be able to demystify here is that whenever it comes to option trading, right, you always hear that, oh, you need thousands of dollars in order to option trade. And I want to be able to demystify that you don't. Oh, let me back all the way the hell up. This is not financial advice. This is merely educational. So if you do seek financial advice, please seek your financial advisor. This is an educational stream. So, all right, let's keep going. So what I want to do here is demystify that you don't need thousands of dollars to be able to start. You can start with $100, but you have to be able to do it very succinctly in the sense of we're trading QQQ. We're not trading Microsoft. We're not trading Apple. We're not trading, and in essence, we are, right? But we're not trading individual stocks. We're trading an ETF, right? We have SPY, and SPY is an index, right? So we're trading QQQ, and that's an ETF, an exchange traded fund that trades, that has those individual companies within them, right? So, and that's how we're going to be able to start with the $100 and then grow it, right? So let's see how far we can get. Who knows? So just to be able to wrap this up, QQQ, right, or excuse me, the New York Stock Exchange is an old school, right? QQQ, right? I keep saying QQQ. A lot of Freudian slips here, bro. It's all right. The Nasdaq, right, is the tech school of these two exchanges. All right. So now we understand QQQ. Now we understand that QQQ is on the NASDAQ, right? Another thing I want to be able to bring to you all and understand is VXN, right? So VXN is a volatility index. So what is volatility? Let's talk. All right, let's go here. I don't want you to see that right now. I'll explain that in a bit. So let's talk about volatility. If I can spell that, volatility. So volatility equals, right? What is the market currently doing now, right? Real time, not in the future, right? Whereas implied volatility, oh, snap, crackle, and pop. Implied, volatility equals what is the market doing? What do we expect the market to be doing in the future, right? Usually within the next 30 days. All right. So volatility is looking at it real time, right? It's like, all right, well, what's going on right now? What's going on? And I'm using orange and purple because I know you can see these. And I know we're close to Halloween. It's just ironic, but I'm using these colors because I know you can see them. All right, let's keep going. So volatility is letting us know, okay, what's going on in the market right now? Like how panic is the market? How calm is the market, right? Is the market trending up? Is the market trending down? Is the market trending sideways, right? So volatility is going to let us know what's going on in the market right now, right? And implied volatility, oh, you would be 2 seconds, maybe 5. Implied volatility is letting us know, okay, what is going on in the market, excuse me, what do we expect to be going on in the market in the future, right? Usually in the next 30 days, right? So when there's high, excuse me. All right, let's go here. I appreciate y'all's patience. Let me make this back black. Black. So high IV equals expensive option prices. Why? Is because we're expecting big to happen, right? So implied volatility is we're expecting something big to happen, right? Either it's something great or something bad, right? So when it's high IV, high implied volatility, you're going to have expensive option prices, right? When there's low IV, you're going to have more affordable option prices, right? Because the market is calm. The market is not expecting anything, right? The market is saying, okay, you know, we're cool, calm, and collected, and there's really not that much going on, right? And the way we gauge this volatility, right? The way we gauge how and what's going on is we use these indexes, right? One of the indexes that we can use is VXN, right? And the reason we're using VXN, look at what just happened here, fam. Again, 1 minute charts. We're looking at it on in trading view, and one day I'm going to take us to be able to go through and understand how to candle trade. But for right now, let's stick to the algo trading. But it's kind of still falls into play. But whatever. Let's keep going. Right. So being able to look at VXN, we can do it one of two ways. Right. We can look at the candles to be able to gauge. Oh man, volatility's jumping right now, or volatility's kind of low. Right. Or we can look at the number, right? The price of VXN. Now, you can trade VXN, but you trade them via futures or other derivative assets to be able to trade VXN. But normally it's used as a gauge, right? An indicator to be able to let us know, all right, how volatile is the market right now, right? What's going on right now? So real time. So this is volatility, not implied volatility. This is volatility. So right now, what's going on right now? So there are ranges. So right now we see VXN is 2035, right? For me in my house, right? This is a bit elevated. The reason I'll say is elevated, VXN between 15, let's do 10. VXN between 10 and 15 normal ranges, right? Everybody's sipping their pina coladas. Everybody's on the beach. Everybody's cool and calm and collected. There's nobody that's frantic. Everybody's like they chill right now. They're cooling, right? Anything above from 20 to 25, 20 to 25, let's call it elevated, right? So the market is expecting something big. The market is expecting something to be able to swing one way or another, right? It could be a swing that's in a benefit for us, or it could be a swing that can hurt us, right? And it's depending how your strategy is working. Now, our strategy could work either way. Either the market is panic or the market is calm, right? And 25 and up, market is frantic. Market is like, yo, I'm expecting something big to happen. I don't know what it is yet. I don't know if it's going to be something great. I don't know if it's going to be something bad. But check me out. I'm expecting something big to happen when you have a VXN above 25, right? Now, VXN and QQQ have a inverse relationship. Not always, but normally it has an inverse relationship. What do I mean by that? When you see VXN popping, when you see VXN on its way up, and it's crazy how we had this big ass candle, now we can barely make it, whatever. So when you see VXN popping, right, and when you see VXN and the psychology, right, the psychologists tell you green is good and red is bad, but not always, right? You can print money on red and you can print money on green, but it's how your strategy does it, right? So when we see VXN declining, right, we normally see QQQ pop. When we see QQQ pop, we normally see VXN declining. Now, that's not always the case. VXN at times could help QQQ increase, right? But normally they have this inverse relationship where if VXN is going down, and I'm proving my point here, VXN is on its way down. What is QQQ doing? All right, it's time for me to party, right? Now, it normally works out that way about 75-80% of the time, but there are instances, right, where VXN can help QQQ. Now, look. See? So VXN and QQQ are like, all right, bro, like I'm trying to party too, man. I don't know what you screaming, but I'm trying to be in this too, right? So there's instances where they can help each other. All right. So VXN is our volatility index. It allows us to be able to gauge real time what's going on in the market. Implied volatility, right, is what we expect to happen within the next 30 days. Now, implied volatility is going to be option contract specific, right? With every with every different option contract, implied volatility could change. So you have a strike price of 300, for an example. That implied volatility could be super high, where you have an option contract strike price of 100, that IV could be super low. So IV is predicated on the underlying option contract, whereas volatility is predicated on the market itself, right? So if we're looking at it right now, me and my house, I'm thinking, yo, QQ, it's a bit elevated right now, you know? So be wary of what you're doing and make sure you have the right bot trading for you, right? And we're also going to make a regime detector, so don't worry. All this is going to be completely automated. I want to be able to make sure that we can automate our trading, yes, but also do it in a process where we understand what the hell is going on, right? So VXN, our volatility index. QQQ, the top 100 tech companies within the US, right? And we just looked at some of our holdings, right? NVIDIA, Apple, Microsoft, Broadcom, Amazon, Facebook, Tesla, YouTube, Google, Netflix, so on and so forth, right? So we understand we have our premise, we have our base. Excuse me. I ain't trying to cough in your ear. All right. So now I want us to be able to understand what is a breakout, right? Let's bring over our support and resistance, gang. Let me check my levels. Make sure my levels are Gucci. If you all have any questions while I'm doing this, please let me know. I'm here to be able to help y'all as much as possible while I'm going through this process, right? So let's talk about a breakout, right? So support is the floor, right? Support is the floor of the underlying asset, right? Let's call it this is QQQ. So this asset is QQQ, right? So support is the floor, right? Resistance is the roof. Resistance is the ceiling, right? So a breakout is we want to be able to gauge, all right, I want to look at the past 3 candles, right? So I usually go 5, but let's go 5, right? Because I usually go back 5 candles, right? So 1, 2, 1. Now it's another one. Remember, every minute one populates when the market is open. So 1, 2, 3, 4, 5. Within these 5 candles, can we detect a breakout? If we do detect a breakout, I want the volume to be able to match that breakout, right? So I just don't want us to be able to, we probably caught a breakout right here, right? I just don't want us to be able to say, hey, 1, 2, 3, 4, 5. I see, and I think there's a potential for QQ to break back out on the upwards, right? So I think if we catch a call, maybe a 620 call, 625 call, right? And for our intraday, right, we can be able to catch QQQ on its way up, or maybe QQQ is on its way down, right? So this 5 candles, 1, 2, 3, 4, 5, this is going to let us know, plus the volume, and the volume is how many people are buying or selling QQQ, right? So not only we want to be able to know, okay, what direction is QQQ going, but we want the volume to match, right? So I want us to be able to create a breakout strategy that says, okay, QQQ is, excuse me, I ain't want to cough in your ear, bro. All right. So QQQ hasn't pushed past the support, right? But QQQ has made new highs within the past 5 candles, and it has the volume to support it. So we want to create a breakout strategy that is able to spot the breakouts when you have the volume confirmed, right? And to be able to ride that wave for a maximum of 15 minutes. Now, the reason we're doing 15 minutes is because, yo, these mother-sucking Greeks. Can you explain Greeks to us? All right. So our Greeks, give me 1 second. Here we go. So our option Greeks, right? So when it comes to option Greeks, there are 5 main Greeks. You have your delta, you have your theta, you have your gamma, you have your rho, you have your vega. Now there are more option Greeks, but these are normally our 5 option Greeks that we use when it comes to like quickly being able to understand the underlying option contract itself. Now the Greeks are specific to option contracts, right? Where we were talking about, bruh, I get it, bruh. What we were talking about before, right, is volatility, and volatility is market specific. So let's quickly talk about the Greeks. So the Greeks, we have delta, and delta is the direction sensitivity, right? So delta is how much the option price moves when the underlying stock price moves $1, right? So in this example, if we have a call option, and delta also tells you the probability of profit, right? And we're going to get to that. Okay, probability of expiring in the money. Also probability of profit, POP. All right, so let's keep going. So if we have a call option, right, that has a delta of 0.3, and the stock goes up $1, right? The option also goes up 0.3, right? So we know that with every option contract, there's 100 shares, right? So if there's 100 shares in the option contract, this delta is telling us that, okay, for every $1 movement in the stock, our option contract is going up $30. Why? 100 shares and one option contract, right? So 100 times 0.3, $30, right? So if delta is negative for puts because it's going down, markets are bearish, so that's why. So example, the negative 30. So the option loses 30 if the stock rises $1, right? So delta also equals probability of expiring in the money. So 0.10 equals a 10% chance, 0.5 equals a 50% chance, 0.8 equals an 80% chance. This is going to be super expensive. This is also going to be expensive because the higher the delta, the more likely you are to be able to expire in the money, and the more likely that whomever is selling you that option, right, is like, yo, I know you about to catch the I know you're going to expire in the money, right? I know you're going to be able to make money off of this option. Because I know you're going to make money off of this option, their premium, what they're charging, that bid price, right, is going to be a lot higher than being able to get an option that says, hey, you maybe have a 10% chance, you maybe have a 20% chance. And you'll see with our strategy that we're going to build here, right, that it really doesn't, I mean, yes, I'm not trying to catch one that's 80% chance, right? Even though on paper it does look good, but again, we're starting with $100. If you're starting with thousands of dollars, you can go ahead and catch that delta that's 0.8, right? But because we're starting with $100, we need to be able to make sure that we can afford option contracts that allow us to be able to be risk adverse, not necessarily risk adverse, risk adjacent, right? To allow us to run right next to that bitch, right next to the risk, but not allowed to take over it. Meaning that we want to be able to be competitive, right? We want to make sure that, okay, we're going to choose deltas that's going to have a high probability of being able to expire in the contract. And we're also going to have different risk mitigation within the strategy. So this is not the only thing, right? But this is one of the main things. So I say this to say that when you see a delta of 0.10, when you see a delta of 0.2, don't be scared of it, right? Don't be afraid of it. Just because you have a 10% chance, a 20%. I preface that as saying you better know what the hell you're doing. Don't be scared. Don't be tempted of it, right? Because there is still a big chance of you being able to not only expire in the money, right, but to be able to make money from that contract. So theta is time decay, right? This is how much value your option loses every day from time passing. So that's why we are doing 0 DTE options, daily options. We get in, we hold it for 10 to 15 minutes, right? Maximum is going to be 15 minutes. Maybe I may even drop it down to 12 because I've seen some really good results with 12 minutes, right? Reason being so is because theta is not in our favor here. If we had weeklies or monthlies, then maybe theta was in our favor. If we were doing credit spreads, maybe theta is in our favor, right? Because with credit spreads, we want the option to expire worthless because we already got paid from it. But the only thing I don't kind of like about credit spreads is like the risk reward ratio, meaning that for every, it's usually a 2-to-1 or like 3 to 2.5, 1.5 to 1 ratio, meaning that you have to risk $2 in order to make $1, but the money that you make is kind of up front because it's that credit spread, meaning that like you're getting your money up front. You don't have to wait for the money, you just have to allow that option to expire worthless. So being able to have theta work on your side for credit spreads, that's phenomenal because you want it to expire worthless. But we're on the other side of that game, right? We don't want theta right, to be able to eat us alive, right? So we're in and out in under 15 minutes. Right? So buyers hate theta, they lose time value. Sellers love theta because they're collecting the decay. Meaning that if you're doing credit spreads, right? If you're selling options, if you're doing wills, right? You love theta. Theta's on your side, right? But if you're buying options, right? What we're doing here, like we're losing that value each and every single minute, second, right? So that's why we're in and out, in and out. I did put my right foot in, I put my right foot out, type shit, right? Vega's volatility sensitivity, what it measures is how much the option prices change if implied volatility moves by 1%. Remember, implied volatility is option specific, so that's why we're talking about it here. Implied volatility lets us know that, hey, we talked about it, bro. We just talked about it here. That's crazy, right? So an example, if Vega is 0.10 and IV raises 1%, the option gains $10, right? So high IV equals expensive options, low IV equals cheap options. So key idea, buyers benefit from volatility increases, sellers benefit when volatility drops. Vega is why option prices, Vega is why options are pricier before earnings or big news, right? And we're not really doing that whole earnings play, shit like that. If we catch it, we catch it, right? But our biggest thing is being able to catch breakouts, right? If we can catch breakouts, if we can be able to look at QQQ and say, all right, I think, look at that. Our low 5 candles was right here. And guess, I told you it was a breakout. And guess what happened? A breakout. And see how VXN is helping? And again, we're gonna go over like how to be able to look at a candle, and how to be able to read this through the market. I'm gonna do that one day. Cause shit, there's even things I want to learn about this, right? But we spotted the breakout. The breakout happened, right? We probably would have sold. So everyone is 1 minute. I probably would have sold right here, and then it's like, all right, y'all can keep the rest. Right. And that's what we're trying to build. We're trying to build a bot, right? An algorithmic bot that can spot these breakouts in QQQ. Go buy me a little quick call, right? For $10 to $15. Turn that $10 to $15 into 30 and then rinse and repeat. That's not to say that every trade is going to work. That's why we're starting with backtesting, right? And backtesting is testing on historical information, right? So backtesting is like being able to put your strategy in a time machine. You want to see how well does your strategy perform in 2024, right? You want to see how well your strategy does in 2023, so on and so forth. And what backtesting enables us to figure out, if it does well in the past, and there's a likelihood, right, that it do well in the future. There's no guarantee. There's never a guarantee in trading. I don't care what I don't care what nobody tells you, right? There is no guarantees in trading. What guarantees it is what the research you've done, what the work you've done in order to get your strategy to a point where it can actually like be worth something, right? What kind of alpha you put into that strategy, what kind of work you put into that strategy, right? So I'm showing y'all my process, how I got into it, or how I get to a strategy. This is 30 minutes in, and I haven't even touched code yet. So y'all follow me. I'm telling you, this is going to be worth it. And I'm glad that y'all tuned into the stream today, because what this is going to allow you to do is to be able to create your edge, right? For you to be able to create your own strategy, right? So after you see my process, right, you're going to say, okay, you know what? This is something that I can do. So it isn't hard, right? The only thing it just takes is a little bit of work. If you put that work in, I'm telling you, the dividends are going to pay. Literally, fam. All right. Let's keep running. So gamma is the delta's acceleration. What it measures is how much delta changes when the stock price moves a dollar. For an example, if gamma is 0.05 and delta is 0.03, when the stock price moves a dollar, delta becomes 0.35. High gamma equals delta changes fast, right? At the money, near the money options have high gamma, right? Think of gamma as how twitchy your delta is, right? And then rho really doesn't matter to us, but hey, let me just tell you anyway, but it's not going to impact us as much because we're in and out of that gang in under 15 minutes. If you were holding an option for longer than maybe a week or a month or 6 months, right, then rho will be an impact to you. But for what we're doing, rho doesn't really impact us. But let's talk about it so you can understand how rho works and what it does when it comes to Greeks for option trading. So rho, what it does is measure how much the option prices change if the interest rates move 1%. For example, call with a rho of 0.10, the option goes up $10 if the rates rise 1%. Puts with a negative 0.10, right, the option goes down $10 if interest rates rise 1%. So rho matters for long dated options, right? Leaps, right? This isn't us. We're doing 0 DTE, right? We're trying to be in and out of that thing in under 15. And there's no revenge trading, meaning that just because we took the L one day doesn't mean I'm going to go ahead and try to make that L a winner. No, take your L, take your lesson, and go on to the next day. So one trade per day maximum. And you're going to see that most of these strategies, out of 252 trading days in the year, approximately, right, we're trading maybe 180, 170. So there's going to be days we're going to be sitting on the sideline. That's fine, because the strategy that we're creating, and as you're seeing here, and as we're building it out, is going to be market regime specific, meaning that like we're looking for very particular things within the market. If those things don't line up within the market, I'm setting my ass out, right? I don't want a strategy that's market regime agnostic, meaning that you trade whenever. We would rather have one that's market regime specific, such that when it does line up, when I can see the tea leaves and I'm looking for what I'm looking, excuse me, and it lines up and I can see the tea leaves and it gives me what I need, then we can go ahead and trade the strategy. Does that make sense? All right, perfect. Let's keep running. Y'all do have any questions, just let me know. I appreciate y'all for being here. Um, Hold on. Sorry, you don't need to see that. Let me go here. All right, perfect. We're Gucci. So now we have the information, and let's go ahead and put it together. We're not doing Greek. This is another strategy I was working on. Sometimes ChatGPT could be amazing. Other times it could be like, bruh, just follow me, man. This memory could be good or it could be bad. Whatever. All right. We want to create a breakout strategy where for QQQ using for QQQ when excuse me. So we want to create a breakout strategy for QQQ looking back 5 minutes, and if the price changes by 0.0005 and volume confirmation of 102%, a multiplier, right, of 102 times, we are looking to be able to build this out for both calls and puts. Let's discuss. So I gave it the base of the strategy. Now let's like really break this out. So, oh, I forgot a couple things, but that's fine. We're still going to break this out. So QQQ 5-minute breakout strategy. This is a short-term breakout in QQQ using price and momentum confirmation with separate setups for calls, upside breakout, and puts, downside breakdowns, right? Symbol is QQQ. I understand that, bruh. Symbol is QQQ. Time frame is 5 minutes. Rolling 5-minute look back. Trading hours. Nope, we're only trading. Okay, I have to update this. We're only trading from 9:30 to about 11:45, maybe 12. Calls is the current price equals the highest close for the last 5 candles, right? That's for calls. So if the 5-bar high is 450 and the breakout level is 452, right? The average volume is 200K needed. Okay, perfect. We have our puts. So it's talking about our entry. So this is how we enter a put contract. This is how we'll trigger a call contract, trigger a put contract, right? The selection is we need to define how we pick our option contracts to buy or sell. So expiration 0. So there's a couple things I need to. All right. We are not doing credit spreads. We are buying single leg calls or puts. Max hold time of 15 minutes. What else? And trading time between 9:45 a.m., 9:40 a.m., and 11:30 a.m. EST. Now let's discuss. And we do not want to. These are lagging indicators. I probably want to use a VXN. Yeah, we are going to use a VXN filter. We don't want to use lagging indicators such as EMA or VWAP, but we will introduce a volatility filter using VXN. All right, so you're essentially describing a pure price movement plus volatility filter breakout strategy, which is clean, responsive, and avoids the lagging indicators. Let's lock in the logic before we build the backtest. So we trade a 5-minute clean breakout in QQQ between 9:40 a.m. and 11:30 EST using the price movement of 0.5, 0.05, not 0.5. That's, you wanted to move $2. No, I wanted to move 3 cents. That's fine. That's fine. And then the confirmation of 0.02 filtered by the volatility levels with single leg call or put with a 15-minute cap. So we're trading QQQ 5-minute bars. Session is between 9:40 and 11:30 EST. We're going to skip the 9:30 and 9:40 to avoid the opening chaos. We're trading 0 DTE, meaning they expire the same day, not the next day, the same day. We're not doing next day, same day. So setup is highest close for the last 5 minutes, 0.0005. I think there's one more zero that's needed. And then the current volume is 0.0T in the last 5 bars. And then that's upside setup. This is downside setup for puts and calls. Volatility for anything less than 22. Now I want to try less than 22, right? Because that may be something we can. Now, we'll only trade when VXN, the NASDAQ Volatility Index, confirms a tradable volatility regime. We're going to try that. I don't know if I want to skip it yet. So we're going to try it. Low volatility, weak breakouts, we want to skip it. The ideal range is between 22 and 30, right? I want to try 20, but ideal. Okay, ideal breakout environment, and anything greater than 30, extreme volatility, unreliable. We're not trading anything greater than 31, 32, right? That's really bear territory. What we're doing is a breakout strategies, and normally breakout strategies are bullish strategies, right? Bullish, bearish, so it can be the combination of the two. So implementation, we already have that. You already have that, bro. Parameters, call puts. We're doing not at or near the money. I think we're going to do OTM. I talked about OTM and ATM, right? We talked about this. I'm pretty sure we talked about this. I've been here for a minute. Yeah. Just in case I didn't, because I don't. Okay. So let's talk about in the money, ITM, out the money, OTM, and at the money, ATM, right? Because we want to be printing at the ATM, bro. All right. So we have SPY, and I'm just going to use SPY as this example right now. I know we're talking about QQQ, but I'm going to use SPY as this example right now. So we have SPY, and the current price of SPY is $4.98, right? So with the current price of SPY being $4.98, what we're saying, if we're buying a SPY contract, a SPY call contract, right? Anything, $4.98 is the current price. $4.99, we're still in the money, ITM, right? In the money because we're super close to the current price, right? The 500 is still in the money, ITM, super close to the current contract. These strike prices here, right? Anything like within 2 levels are going to have super high IV, right? High IV, what does that mean? Expensive contracts, right? So what we want to do is being able to buy contracts that are OTM, out the money. For me in my house, now everybody has a different pedagogy, right? Everybody has a different process philosophy when it comes to at the money or OTM, ITM type shit. So for me in my house, OTM is 2 or more levels up for calls, right? We're going to talk about puts in a second. But OTM, out the money, right? OTM, out the money, is 2 or more levels up, right? So anything 501, because our current price in this example is $4.98. So anything greater than or equal to 501 is out the money, right? Because 2 or more levels up for calls. So let's talk about puts. Puts works the exact opposite, meaning that, so the current price. So what does this mean, right? Let me finish this up before I get to the puts. So let's say we bought a strike price, a call with a strike price of 501, right? And the current price is 498. We don't start making money until that 498 moves closer to the 501. 499, yeah, we making a little bit, not that much, right? Yeah, delta is going to increase. Yeah, your price is going to move, right? Yeah, you're going to start making money. 500, you're starting to clap your hands. She's like, yo, please, come on. It's like a pretty girl, right? Looking at you, right? 499, yeah, she blinking at you. Yeah, she's probably smiling. Yeah, she's probably giving you a little hint, right? 500, yo, she's telling you, she's giving you a little wink. She's giving you a little side eye. She's saying, yo, fuck with me. You feel me? You get to 501, she's telling you, come holler at her. She's telling you, yo, hey girl, how you doing? But nonetheless, I want to give you another analogy, right? Another example. So for 500, 499 for in the money, right? When you're buying out of the money options, right, you're really not going to make that much money, and IV here is going to be super low. So that's why we're doing it low IV. What does that mean? Cheap contracts. So that's why we're buying OTM contracts, out of the money contracts, right? So puts work the same opposite way. We're at the current price of 499, right? So 497, we're still in the money. We're still super close to the current price. 496 in the money, still super close to the current price, right? 495, anything less than or equal to 495 is out the money because that's 2 or more levels down for puts. That's for me in my house, right? Everybody else uses a different. Everybody has a different practice, right? For what they consider in the money, out the money. For me, I found a good balance at 2. I've heard as high as 10, right? I think that's fucking crazy. But I heard as high as 10 for like in the money, out the money, right? So that's why this whole ATM at the money, I don't think we're going to do that. We're going to do OTM out the money, right? Contracts, because I want this to be a little bit more better, right? Must exceed 500 contracts, liquidity check. So we do have our trades that I can bring in, so I'm not worried about that. Stop loss management is 35% of the option. So if it's $100, right, we're only risking. So for this, we're for $100, right? I'm risking up to. I might as well just write it here. So for risk management, starting capital is $100. Risking up to, let's do 90%. No, I'm gonna do 80%. No, I'm gonna do 90. No, I'm gonna do 80. Sorry. Risking up to 80% of starting capital, right? Or $80, right? So what the stop loss, SL, is stop loss of 35% is saying is that we are going to hit the brakes if if the value of our contract gets to less than or equal to so 80, I think that's like 80 times 0.35, subtract 80, $52. Less than or equal to $52. Stop, homie. Losing money. Right? So this is our risk management. Risk management. Can I spell? Management. There we go. Starting capital is $100. We're risking up to 80% of the starting capital, or $80, right? Our stop loss is saying that once we hit $52, right, we're stopping because we're losing money, right? Because I don't want us to be able to give back into the profit, right? So that's what this stop loss is saying. Our max hold time is 15. I agree on that. One trade per day. One trade per direction per 5 minute. Prevent overtrading. What the fuck? I don't know what this is saying. One trade per direction per 5 minute. You're only doing one trade per day, bruh. Skip if new trade is already in position. Okay. So there's a couple things I want to fix on this. First, what we're doing. What are we doing? What did I say? 0 DTE only, homie. And then what? I said this. I want to do because I want to try to trade. Okay, I'm gonna say low volatility is like 12, bruh. 12 we can skip, but 12 we may print. Let's say low volatility is 8. 8 we can skip, but 8 we may print. All right, low volatility is 5. So anything between less than 5 I don't trade. Anything from 5 to 32 I'll trade, and anything greater than 32 I won't trade. All right, so that's that. We're doing OTM. Okay, you know what? This is what I'm going to do. Okay, let me just refine it one more time. All right. So we are going to do OTM, not ATM or ITM contracts. Also, we are going to do skip less than 5 VXN and trade between 5 and 33 VXN and skip greater than 33 VXN. I don't want it too crazy, but I want some. I want to catch some of it, but not too crazy, right? What else are you? I don't agree with you here. Oh, only one trade per day. No revenge trading. Revenge trading. What else? What else? What else? Cost. Um, we are at 80%. We are starting at $100 and allowing for. This is where I'm gonna really break this down for gang. Anything when balance is less than, let me just less than 499 can trade up to 80% of starting of balance, and between 500 and 1000 can trade up to 50%. No, yep, I'll do 50%. I'll do 50%. 50% of balance and greater than 1000 can trade up to, let's say 30, no 20%, no 30%. 30% of balance greater than 1000. Okay. What else? What else? Um all right. This is Gucci. I may do 935. All right. So QQQ 5 minute OTM single leg breakout strategy. 5 minute. You're not doing 5 minute candles, bro. Fucking bro. Whatever. All right. Sorry. No revenge trading. One trade per day. Price is the highest. Close. Okay. 0.05. Average the last 5 days. VXN between 5 and 13. Buying out the money calls, not ATM or ITM. Price. Okay. Out the money puts. Position sizing. 80 per trade. 250. 350. Okay. I love it. Single trade per day. Adjust based off the balance. Bruh. All right. Now we got the basis of that. Let me go ahead and get Claude Code open. Strat. That'll be cool if I can just be like, oh, Claude, open. We're going to get to voice activation. That's going to be super creepy, though. All right. I like to use 4.5. The reason I like to use 4.5, and that's Claude Sonnet 4.5, that is the best one that I've seen so far. Now there's Opius, however the hell you want to pronounce it. I don't like it as much because the expensiveness of it isn't really, it doesn't make sense for me. So that's why I just stick to my little 4.5. Are you going to, bruh? You just, all right. Let me close you out. Now you're open. So we're using Claude 4.5, right? We're not using Sonnet 4.5. I'm not using OPS. I feel like it doesn't make sense. And using 4.5, it gets the job done. So what I'm going to do, we have the basis of our strategy here, right? Now we created the strategy. So you saw how we create the strategy, right? I went from, all right, this is what I'm thinking about creating for a breakout strategy. I use ChatGPT to be able to flush that strategy out, right? So we have the strategy that is flushed out. Now, guess what? We're ready for a back test, right? What I want to do before the back test is we're going to bring the strategy over to key point 0 DTE opportunity, keep risk concentrated. OTM trades reduce capital requirement but increase directional sensitivity. Filter VXN for ultra low days or extreme high, and strict rule sizing to protect the capital. Next, shall I draft the backtest? No, I got you. So now what we're going to do is bring this strategy over to Claude Code, So there's two ways we can do this. Like, I don't like using the agent right now, and the agent, there is agents, AI agents that you can create within Claude Code. Now, I don't like it. Reason being so is because like it hides all the work that it's going to do, right? So I can create an agent. Fuck, bro. Do I want to do this to show y'all? No, because I want y'all to see the process, right? But no, I don't want you. No, I'm not going to create the agent because the agent, like, it doesn't provide as much feedback as what's going on. Like, you have to take word as bond type shit that is doing its work. So I don't like using the AI agent for this, but I am going to use it just to be able to show you the example once we have our back test ready to go. So for right now, I'm not going to use the agent. So I'm going to paste in our strategy that we create with ChatGPT, right? So we're using one AI to be able to create our strategy, right? Then we're going to use the other AI, Claude Code, to be able to assist us now creating our back test. And remember, the back test is putting our strategy in the time machine and figuring out, okay, how well does it do in 2024? How well does it do in 2023? How well does it do in 2022, right? Then we, excuse me, I ain't trying to cough in your ear, bruh. Then what we're going to do after we've back tested the strategy, then we're going to tune it. We may need to optimize it a little bit, right? Depending on the performance. If the performance is Gucci, then we're going to slide. We're going to go from strategy, create our bot. Then we're going to start paper trading it tomorrow, right? Because I don't think we're going to get done. The market closed in like 23 minutes. And right here, buying 0 DTE strategies, bro, you're wasting your time. And we're going to be paper trading using IBKR, Interactive Broker. So if you're familiar with IBKR, you're going to be using that with paper trading. That's one of the most comprehensive ones that I've seen. I've tried Tasty Trades. It's okay. I have a Tasty Trades. It's all right. Alpaca is okay. But IBKR is one of the most comprehensive ones that I've seen that allows us to be able to algo trade, right? Because we're trading with our robot, right? Or we're trading with code, right? So because we're trading with code, I want to make sure that the API, the application protocol interface, internet protocol, API, application programming interface, right? The API, application programming interface, is how we're going to be trading programmatically. And I'll get to that once we get to that point, right? So here is the strategy that we are thinking about backtesting. Before we proceed, explain it to us like we are 12 so we can ensure we are on the same page before we move forward with backtesting it. Also, oh fuck, I was supposed to say something else, but whatever. So the way I like to use any AI, and you'll see it like a pattern here, I like to treat it like we're in a deposition, right? So if you ever been to one or if you ever seen one on TV, there's not going to be a question when you're in a deposition with an attorney, lawyer, counselor, however the hell you want to pronounce it or say it. There's not going to be an attorney within a deposition that's not going to ask you a question that don't already know the answer. So that's what we're doing here, right? So I'm asking the question that I already know the answer to, right? Because I want to be able to build up context for our AI. Like, we don't just start saying, hey, this is it, go create the back test. The way to get the most out of Claude Code, right? Because we're using Claude Code, right? Is to be able to build context, treat it like you're in a deposition. First, you want to be able to ask it questions based off what you want to do. We already know what we're doing. We're creating a back test, right? We're creating a back test for a QQQ breakout strategy, right? Because we're creating our back test, and we already have the strategy in mind of what we're doing. Now I have to create that context here, legit. So let's see what it did. You're trying to catch QQQ when it makes strong moves up or down early in the morning and bet on it with one option trade per day. How it works: only between 9:40 a.m. and 11:30 a.m. Only one trade per day. No do-overs. Only when the fear meter, VXN, or volatility index. Some people like to use the fear meter. It's the same shit. Volatility, fear, right? Those could be interchangeable. VXN is between 5 and 33. Not too calm, not too crazy. What are you looking for? For calls, betting price goes up. QQQ breaks above the highest price point for the last 5 bars, at least 0.05. And I'm going to probably drop that to 0.005. The trading volume is 2% higher than the average of the last 5 bars, 5 minutes, right? The trading, and think, okay, price is going to start rocketing up strong energy. For puts, betting on price going down. QQQ price breaks between the lowest of the last 5 bars, right? So same thing, just for puts. What options do you buy? Out of the money, cheaper but riskier. Expires today. Expires today. Okay, that's so we are only doing zero DTE, only um only and not options that expire tomorrow. Also, what's another thing that I saw? I was like, oh, this price. And for the price movement, we want to update from point zero 0.05, point 0.5, and it is supposed to be 0.005. 0.005. All right. What else? What else? What else did I catch? How much money do you risk? How do you exit? Oh, TP. Oh, we talk about profit. Damn, I forgot to take profit. Also, we want to discuss being able to set up proper TP level, take profit levels before we proceed. You know what I'm going to do? Because I have another strategy that this is going to kind of almost based off of. And what I'm going to do is bring that baby in. Hold on. I'm going to bring you in and no, where is it? There you go. Thank you. Boom. You want to see that? All right, perfect. All right, only trade zero DTE. That makes sense. Breakout is 0.0005. Yep, that's what I like. Before we backtest, we need to decide on the TP take profit targets. Here are some choices: fix, TP1, TP2, TP3, each proportion of exit 33%. Okay. Single, trailing stop loss, or time based. Okay. So we have a time max hold time of 15 minutes for this, but we also want to allow if the option can hit TP levels. We want it where we can allow for maybe using option 1, but we want to ensure that it is a 1-to-2 ratio. For every $1 we risk, 1-to-2 risk ratio. For every $1 we risk, I want to make $2, right? Approximately. And this means approximately risk ratio. Now let's discuss. All right, and when it's doing that, let me go grab the data. Data. All right, here's the data. Boom, we got our data. If only it was that quick. Perfect. Let me design a 1-to-2 risk reward take profit structure with scaling exits. Stop loss at 35%, max hold time at 15, scaling option 1-to-2 ratio. TP only target 70%, 2 times the risk, exit 100% of position. Okay. Redo, redo, and understand that we are trading options. So must be full exits, not partial contract exits. That is not allowed. Now let's discuss. Data. You know what? Okay, never mind. Let me hold that down. All right, let's yes, you can't sell partial. Okay, it's okay. Full exit 1 to 2 risk reward ratio, stop loss of 35%. I think I may drop that down to like 20, but let's see. Max hold time of 15. TP. So take profit 70%, 2 times the risk. Exit position at 70%. Clean 1 to 2 ratio. Conservative. I think we could be a little bit aggressive. TP of 105, 3 times the risk. Higher reward, but might not hit as often. Still exit fully at 15 if not reached. Hold 0 to 2 for TP1. 10 to 15 if 40% or more, take it. If less than 40% at 15, exit at market. Avoid holding loser and then Larkin partial wins. We should stick with the 1 to 2 and then go higher. Should we do the fixed or the time based? I want to try the time based because that one looks interesting. Can we are thinking about using the time based dynamic exit. But we want it to have 2 TP take profit levels, being a bit more aggressive. So now with that in mind, advise what you think. Let's check it out, homie. Let's check it out, homie. Since you want to be aggressive with two take profit levels and time-based logic, here's what I recommend: a take profit of 70%, 1 to 2 risk reward ratio, conservative target, and then take profit of 140, 1 to 4% aggressive target, time-based. So 0 to 8 minutes, hold for TP1, let it run for a big run. 8 to 12, accept TP1, and then lock in the 1 to 2 if 1 to so lock in TP1 if TP2 hasn't hit. 12 to 15, exit 35% or better. Take what you can get. And then 15, exit at market no matter what. 35% stop loss doesn't change. Why this works: early exit in 0 to 8. Max time for TP2. Options move fast. Mid trade between 8 to 12. Realistic for TP1. Don't get greedy. Late trade for 12 to 15. Protect capital. Theta decay kicks in. Always respect the 15-minute hard stop. Even more aggressive. 140. 10 to, no, I'm not doing that. TP1 gets more time, but tightens the exit window. No. Let me do the version 1. All right. So lay out the plan with using version 1 before we proceed with backtesting. Backtest, baby. We on it, homie. I don't even know why I said that. Backtest, baby. All right. Why I think. All right, QQQ. So we enter between 9:40 and 11:30 EST. Max trade is 1 trade per day. No revenge trading. Expiration is 0 DTE. Expires the same day. The price change 5 bars. Okay, I love that. I love that, VIX. This is what I like. Option type buy when we're up, buy when we're down. OTM only. Expiration. Oh, you know what you didn't say is the delta min and max. TP, trade flow logic, exit, 1 trade per day. Before we do that, we didn't discuss the delta min and max, and also review. I'm going to have it review the sprinter. Where are you? Okay. Where's the back test? Here's the back test. Review the following. Oh, freak. I just copied the. Y'all bear with me. I thought I copied it. Copy. Wrong file. Boom. Paste. Let's rename. Example BT. Review the following example backtest and then advise what we can take from it in order to create our own before we proceed. Da-da, 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 da-da. Okay. Do Algo. All right, let's see. Data loading. Beautiful. Greeks. We have a lottery. We have that. What we need to change is the minimum delta 0.10 and 0.35. What delta range do you want for QQQ? Lower deltas, cheaper, further in the money, less likely to profit. Higher, more expensive, closer in the money. Exit philosophy, replace the time-based dynamic with our new time-based. I love that. VXN filter not in this code. We need to add the VXN data loader plus that. Delta range, what should it be? We are wanting to start with the delta range of 0.05 to 0.44. And now before we proceed, review the data for QQQ and VXN and make sure we are good before we create the backtest. Let me get the data. Let me get the data. I have the data. Let me bring over the data. There's the data. Use terminal commands. Terminal command is, so what I'm doing right now, I'm running Claude Code from a terminal, right? So this is a terminal within the project, within Cursor, right? Cursor also has these side panels that you can use in order to chat with their AI. Their AI also has this 4.5 Sonnet that I'm using, also have 4, so on and so forth, right? But I like to use Claude Code because it's a little bit better for these particular type of projects. There are going to be instances where I do use Cursor's AI, but majority of the time I'm going to be using it in terminal, right, with Claude Code. So with terminal commands, in order to understand the data and make sure it is what we need in order to backtest. So I'm going to let it do that. While it's doing that, to Algo. This will be interesting. Da-dum, da-dum. Let's have it check the data, and then it's checking the data. Kind of spazzing right now. It's kind of spazzing right now. It's kind of spazzing now, fam. I got my QQQ data, bruh. Excuse me. Do 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 do. I see you, homie. Do-do-do-do-do-do-do. All right, now give me an output. It's there, I promise. It is there. The premium ranges for the bid and ask. Remember, the bid and ask is what the buyers pay and what the sellers pay. It's checking the quotes. And I'm just waiting for this to output. I thought this was going to be a little quicker. I didn't think it was going to take that long to be able to go through data. But again, these are millions, hundreds of thousands, if not millions, rows of data. So I can understand why it's taking a bit to be able to go through it. I should have told it to use. Remember, Pandas is the Excel for Python, and there's also another version called Polaris. Polaris is just a faster version of Pandas. I should have had it use Polaris instead of Pandas, right? It still could do its job, right? Polaris would have done that, but it's just taking a bit longer to be able to go through these data sets. But that's okay. It's still making its way through it. We are getting this work in, right? Now it's just a matter of being able to make sure that our data is good, our data is ready to go. And once we confirm that, we can start with backtesting. I'm excited for you all to see this and to show you that the process is not hard, right? You have your idea, and then once you go from your idea, then you say, okay, you know what, I want to backtest this idea. We're backtesting it, we're throwing it in a time machine, and we want to see how it performs in 2023, 2024. So that's why you see it's checking the data there. It's checking 23, it was checking 22. It would take a hell of a long time to check 22. It's checking 22. All right. Not needed is the Greek file. Okay, hold on. Good. 15 million rows of 2022, 2023, 2024 has all bid, axe, delta, strike, right. What the full right? Timestamp expiration, 0 DTE, perfect for your strategy. Delta ranges, full range, right? Delta, right? Premium ranges, calls and puts, open, high, low, close data. This is the intraday data. The VXN has what we need. Minor issue, the VXN starts at 2021-03 and QQQ starts at not a big deal. We just need a filter to match both dates. Quote file is not needed. Greek file already has the bid and ask. Perfect. We have everything we need. We have the QQQ option data. We have the open, high, low, close for breakout signals. We have the VXN for the VXN filter. We have 3 years of data. Perfect. So final strategy parms. Let me go ahead and take this and then throw it in our notebook. So backtest, no, strategy, strat, parms, V1. Boom. We have our delta range. We have our breakout, right? I still may update this a little bit because I still think that's a little too high. Our VXN filter. We have our time-based take profit. That's what TP stand for. We have our stop loss, our max hold time, and our entry window. All right, gang. Let's go ahead and get this done. All right, gang. Let's get this done. Let's call the backtest What do you want to call this? This is QQQ and a QQQ breakout strategy. Let's call this QQQ. Just breakout. No. What's a like a cool name? When you think of QQQ, those are tech companies, right? Techie break? No. Tech break? No. TB sounds like tuberculosis. No. Hold on. This is I didn't think this was going to be the hardest part. Uh techie 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 baby. Yeah, let's use two techie baby BT. Techie baby BT. Techie baby. That sounds so weird. Um Sniper. I just call this sniper baby. Sniper baby BT.py. Um let's make sure to take what we learned from these conversations and from the example BT. No mocks, no fallbacks, all real implementations so we can ensure we are properly backtesting. And let's start with 2024. And I'm going to hit auto accept so it can go ahead and print out the code. Now, if I would have just said, if we would have created an agent, right, we wouldn't have gotten all this, right? It would have created the work. It would have done it, right? It would have been well received, right? Excuse me, well done. It would have been done okay, right? Oh, all right, whatever, right? But the only thing is, like, we wouldn't have gotten in all this feedback, right? It just would have went into this little cave, did the work, and be like, oh, I'm done. Pat me on the back type shit. But now we get to see the entire process. So I'm excited for that. Now we're creating our back test for our breakout strategy, and we're waiting to see how that's going to play out. Now, if you all do have any questions while we're working on this, I can answer them while I'm waiting for this breakout. Oh, this output here. So let me know. Now, usually I am on Twitch. Just my first couple of days bring this over to YouTube, and I think I'm going to be a lot more consistent, like streaming on YouTube, because I just like it. Y'all cool over here, man. And it's not as finicky as the others. I ain't gonna hold you. Cause Switch sometimes, bro, it'll be like, bruh. But nonetheless, we're working. Well, we're doing great work. I'm waiting for our AI to finish up this work here, and as soon as that's done, we're going to continue on. You know, this is great stuff we're doing here, people. You all are seeing behind the scenes. This is quant level stuff, right? And what I mean by that, there's different hedge funds that are doing what we're doing. There's different quant managers that are doing what we're doing, right? We're creating algorithmic code that can trade for us when it finds a breakout. So we don't need to be the ones that is automatically that's looking for this. So we're automating our trading, right? And being able to do this, it is a process with this, right? It's not just like, oh, you just jump in and go. You saw how we research, right? You saw how we went from being able to get the idea. Now we're creating the back test. Now, once we have the back test, now we're getting to the closer and closer to being able to automate how we trade. So here we go. We got our back test. I can wait before I delete it. Let me just look at it. Let me put eyeballs on it. $100 capital. Oh, that's not it. All right. We got our back test. 9:40 to 11:30. 5 minute, minute max. I love it when it works out for us, baby. No, I'm going to run it actually because I don't trust you to run it. I want us to look at it. All right. We got our back test. Our back test is ready to run. I just want to make sure there's no issues. Okay, so we have our position tiers. Running our back test. Okay, so let's go ahead and run our back test. Boom. Close that out. Now let's run our backtest. So our backtest is loading. It's going to take anywhere between 5 and 10 minutes, maybe closer to the 5 minutes, because again, you try to do something 23 million times and tell me how long that takes you, right? So just be patient with us. We're loading up our backtest, and this is version 1 of it, right? V1 results. So we're waiting for our backtest to load. We're running our backtest. We had to create a custom backtest because the Python libraries that are used for backtesting, like backtesting.py or backtrader or vector.bt, don't really work with options. So that's why we had to create our own backtesting library. So that's why I brought in this example here, right? That just gives the AI a framework on how to create this backtest, right? And again, there's some things that I took from backtesting.py, like this library here is from backtesting.py. It allows us to be able to get the printout or the metrics of how the backtest went. We're using pandas. Pandas is the Excel for option for Python, right? NumPy is the calculator. This is in order to plot. This is in order so we can shift through the date and time, right? And typing. So there are a few things. Okay, our backtest is running. Let's look. Our backtest is running. Our first trade was profitable. All right. I'm seeing some okay results, people. I'm seeing some okay results. We're at 722. That's the highest I've seen it. The highest I've seen right now is 864. So I hope you can see this. Like, I've made this grotesquely large so you can see what I'm doing. Hold on. Give me 1 second. Yep, you can see what I'm doing. You can't see it. So we are oscillating. We just dropped down to 230. That's fine. We are in 236. And what month are we in? We're in what month? So there's a couple things we have to check because we're in February. We just got out of January and it was 147. So let's see. So we made $47, but the highest I've seen was 800, but then kind of lost it. So I'm gonna let this run. We are in February right now. We just crossed $1,000, right? So that's what I'm saying. You got to take the emotions out of it because if you just made $100 for 1 month and then the next month you crossed over, are you going to stop or are you going to let the option go? We're in February. We're in March right now. March, we just cleared February with 1,000. So let's see if we can be able to build off that momentum. Right. And another thing I love about being able to automate this, right, being able to have algorithms do this for us, right, is that we're taking the emotions out of it, right? We're not the ones, because if you saw the account went from $600, $700 to 147, what are you doing? Are you pressing pause? Are you saying that no more, we can't do this anymore, right? Or are you allowing the strategy to do what it was made to do? Go out there and go make you money. We just crossed 2,000. It's practically the end of March. We're in April right now. We're about at 2,500, right? We just crossed 3,800. This is the highest. That's the highest trade. Matter of fact, I want to break this down. This one. Let's break this down. Let's break this down, and then I'm gonna let the back test keep going. Oh, we could just crossed 5,000, but I want to break this down so we can understand what's going on. All right. So the account balance is at $2,599.41, right? So it's in preservation mode, right? So it's using 30% of the capital. The risk amount was $779.82, right? So I love this because it's just crossed $10,000, just crossed 11,000. We're in May, and we're at 11,540. That's crazy. All right. We just bought a call option, right? This call was 442. It had a delta of 1.91. meaning that it had a 19% chance of being able to expire in the money, or that for every $1 move, we're at 17,000. That's great. Every time I look over, 19,000. Just made 2,000, 21,000. We started at $100, people. Let's keep going. 19%, right? So it's telling us that it's a 19% chance of this being able to expire in the money, and also for every $1 movement, this is going to move $19, right? So we got in at $30, right? We hit TP1, 72, right? TP2. So we got out. We bought 25 contracts, right? Because we have what, 790. We're at $48,000. We're at 49,000. We started at 100. We started at $100. We're at 46,000. This is not financial advice. This is not financial advice. Go see financial advice. At 51K. The highest we made was 5K off one hit. Did y'all see that? 4,000. 5,000. Oh no, let me hold this. Let me hold this. We just crossed 50K. Y'all seeing this live, man? Like, I'm not holding you. We just made 70 grand. We crossed 60. Like, y'all are seeing this live. How I'm gonna explain that one next. Okay. All right, let's go back here. So we bought 25 contracts, right? The total cost of it was $750, right? We had $1,800 left in the contract. So we got in at 442 at $30, right? It cost us $750, right? And then we got out after 3 minutes, right? TP2 hit, so it hit 140%. So 175, exactly 175%, right? We sold it at $82 per contract. So we made $3 grand. Oh, excuse me, we made $1,200, right? That's crazy, ain't it? Let's talk about another trade, right? The trade was at 45,000. The account is at 45,000 now, right? So only risking 30%. That's about 6,800, right? So we bought a call. That call was 46 call. And you see, like, deltas doesn't need to be super at 70,000, bruh. We just made 72. All right, we're at 70,000, and it is, again, we started at $100. Like, I want to ingratiate that we started at $100, and this is the first time I ran this back test. So it's not like I didn't know what the results are going to be. I thought maybe we'll catch like 1,500, 2,000. Never in my wildest days did I think that we were going to cross 76,000, 75,000, and we started with $100, y'all. I can't wait to paper test this. I cannot wait to paper test. We're at $81,000, 85,000, 88,000. We started at $100. All right, let's finish this. So don't let a low delta scare you, right? You saw the previous example, and it's not to say like this strategy loses money too, right? Just because we up right now doesn't mean $97,000. Can we cross 100? Just because the strategy is performing well, right, doesn't mean it doesn't have its off days. It does have its off days, right? So I just want that to be 99,000. Can we cross 100? We had $100,000, 103K. We had 100 grand, and we started at man. This is $104,000, 106,000, and we started at $100, y'all. We're at 114,000, 115,000, 118,000, 126,000. Okay, I don't think I don't know if I believe these results right now. Like, you see this, and you see this, you see this, and you see this. All right, y'all. I just really. All right, you know what? This is what I'm going to do. Let me go to card real quick. $149,000. Review the back test that we have, and we're in December. Review the back test that we have. Is the logic here correct? Are there any issues? Is this proper for backtesting option trading strategies? Is the calculation slash functions slash methods? I had 154,000. The highest I seen was like 160. Functions, correct. Is there anything at all that would lead us astray based on the code here? And for this, I'll use Opus. I'll use Opus, right? It's like, all right, I'll use that. And like, I really, really want us to be able to see, like, how's it going to go? All right, go ahead and check my back test. The back test peaked at $161,891.51, right? The back test ran from 2024 in 2024, right? It made 238 trades. So it was active, right? The last trade it lost $3,000, right? The total return is 149,000%, right? Price calculation. Okay, looking at the QQQ, before I even go to that, looking at the QQQ Sniper 0 DTE backtesting code, I can see this is sophisticated option trading strategy implementation. Let me review the critical areas for potential issues. Proper things correctly done is the proper fee structure, the slippage modeling, the bid-ask spread handling, 0 DTE calculations, and the risk management. The critical issues to fix is the exit price calculation is wrong, right? So mid, okay. You are using the mid price for exit when you should be hitting the bid or the bid minus the slippage for conservative modeling. The data integrity checks, the code doesn't verify that the option data exists for the entire trade duration. Unrealistic stop execution. In reality, when the price drops through your stop loss, you might get filled insignificantly below the stop loss, especially for the fast market of the 0 DTE. Look ahead bias, then immediately finding make sure that your timestamps are aligned and assuming your option quotes are available at the exact moment of generation. Volume filter is too weak. The 2% volume filter is, I don't want to change that. Potential improvement, add a spread width filter, right? Implement partial fills. I don't want to do that. Add an IV position filter. I may do that. Handle after hours and before hours. That's when you're creating the bot. Peak hour tracking. This only tracks for reporting but doesn't implement trailing stop loss or dynamic exit based on pullback of peaks. Backtesting validity, validity, validity concerns. There we go. Make sure your data is included in a delisted option. Okay, we're going to do that. Fix the pricing, add the spread filter, increase the volume, and add a safety check for data. Data. I want to do this. Okay. So these are basically like a few things that may throw it off. I don't think it like will throw it off. Unrealistic stop loss execution, look ahead bias, volume filtering. Okay. This is just crazy. Sharp ratio is not the best, right? We're looking for a sharp really of anything over 0.75. But if you're making 149,000 when you're starting at $100, will you accept a sharp of 0.35? Crazy, right? Max drawdown is 82%. That's low key high. That means at one point in time the strategy was at like $18. Then it rallied to 149,000. Talk about momentum, kid. That's still kind of high, right? That's a psychological thing, right? If you're at $18, what are you going to do, right? Average drawdown was 15. The number of trades was 238. The win rate is 54%. It's a coin toss, so I want that to be a little higher, right? The best trade was 86,000, 8,000, $8,682.91. The worst trade we lost was 5,517. The average trade was 628. The average hold time was 12. The profit factor was 227, meaning for every $1 we put out, we getting 227 back. So I love that. All right. Let's all right. Review the following results. I'm talking about like really, really review and make sure these are accurate and true, and we'll do the same and compare notes. I kind of already did, but I'm gonna let Jit. You don't need to know that, bruh. You don't need to know that. It's between you and I, bruh. That's crazy that our back test went like stupid. I'm talking about stupid. All right, I'm gonna go grab some water. I appreciate y'all's patience, bruv. I'm not, I appreciate it, bruv. This is just I don't know. I'm kind of taken back myself. Like that's the first time I ran a back test. The initial time, the first time, like running a back test and hitting a 149,000. Either we did something really, 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 really good, or we did something really, really, really bad. Um, and we gonna figure that out. Well, we gonna figure that out. And this is dope. Like this is kind of cool. Like we'll be able to go from our back test to our bot like really quick. This is cool, and I can be able to run this thing tomorrow. I'm gonna run it live. Um, The parameter verification. 5 actual, actual. Okay, okay. 138 trades consistent across all files. The win rate is 54%. The final balance is $149,671.88. When we started at $100, like I just want to preface, this is not financial advice. If you want financial advice, go talk to your financial advisor, right? Like what we're doing here is merely education. I'm going to run this shit for real. Like I ain't gonna hold you, but this is not financial advice. Average hold time was for 12 minutes. Time stops, meaning that it waited the full 15 minutes, right? And we lost 15,000. The most common options don't reach TP. All right. Take profit one, right? This was solid win between 12 and 15 window. The stop loss, we lost 75,000. The largest loss, right? You got to look into that. That's crazy. So that means we could have had more. TP1 was 121, right? 30% of the trades hit 70%, right? 5% of the trades hit 140%, right? Rare but massive, massive. Trade verification, right? The actual So there is 137 puts and 101 calls, about 57 to 42. The ROY, the max ROY was 300%. The minimum ROY was 49, and the average was 119%. The trade frequency, almost near about a trade a day, but I'm not looking for that. Well, I don't want to trade it because I want you to trade specific market regimes, right? And I'm going to test this on 23 and 22 and see how it does. Trade one, critical. Can't verify from CSV alone. We need to check if the VXN is 5 through 33 was enforced. The code shows that the VXN filter is okay, but no VXN login in CSV. Key insights is that 48% were time stop exits. The options don't move enough. Most trades held for the full 15 minutes without hitting TPs. These trades were small losers and winners. Only 5 trades hit the TP2 level, right? That's 140%. But when hit, it generated 17,000 in profits. Validated the time-based structure. Early trades got bigger TPs. Stop loss protected the capital, 75% total losses, right? Without the stop loss, losses would have been much worse. I think we can decrease that. The win rate of 52% with a profit factor of 2.27 is solid positive expectancy. The average winner is larger than the average loser. Concerns is okay. This is what I want you to check. You're gonna check this. Kind of don't, maybe unrealistic stop loss execution. You might get filled significantly below the stop price, especially in fast market, fast market of 0 DTE. Look ahead bias. Is there any volume filters? Okay, let me just do these. Review, and let's discuss and ensure these are not an issue, or if is, let's confirm before fixing. So I told you I was going to be using little cursor. So what I'm going to do, I'm going to have the AI make a folder and then put these in a folder and then organize them by version so we can quickly refer to it. So create a folder named backtesting results. Add year from 2024, 2023, and 2022. Make sure it is its own subfolder. Then okay, let me analyze both concerns. The exit price calculation, the current code equals get current price, self slash current price, filtering logic, row. Okay, issue confirms that entering at ax plus slippage is correct. You may pay the ax. Exit, selling at bid, slippage wrong. You may sell at bid. All right, correct logic. When you sell at exit, you hit the bid price, not the mid, and it should be enter row bid, exit slippage. Impact of the results. The mid price are optimistic. Assume you get the exit between the bid and the ask. Realistic exit is the bid minus the ask equals exit. You exactly hit the bid when you're selling. The spread on 0 DTEs can be 0.005 is typically this converts to results by inflated 2 to 5% per trade. Even if I were to take away 2 to 5% per trade, bro, I'm still over 100K. So that's not really that much concerning. The look ahead bias, no look ahead bias. Here's why. The breakout detection is look back at QQQ. So I told you OPS was just doing this extra shit. Only looks at previous bars, not the current bar. the option quoting system. Option equals find option date. Okay, Greeks. Filter, get quotes at the same timestamp as the signal. This is realistic. Both the QQQ price and the option quotes update simultaneously. In real trading, you see both at the same time. Entry execution, add slippage for account delay. Okay. Timing is correct. The signal generated using past data only. The entry uses the current bar, realistic, and the exit monitors the future bar only. No look ahead bias. So the look ahead bias was correct. So that's wrong. So we just need to fix the exit price logic. Okay. Nope. Triple check the exit price logic that it is incorrect. If so, let's fix it. Then create V1 2024 folder and do not copy, but move these files in V1 folder. Check me out. Before I do that, I'm going to have, let me just make sure. Okay, you're good. Before I do that, I'm going to have Cloud Code go through this one more time, like with a fucking fine tooth comb, just to make sure there isn't any issues. Potential improvements, implement a partial fill and position size reality, add an IV rank and percentile filtering. You're loading implied volatility, but not using it for filtering, considering adding an IV rank. Handle after hours and pre-markets, ensuring you're only trading, bro. We already do that. Peak price tracking. This only tracks peaks from reporting, but not implementing doing trailing stops or dynamic exit based on the pulling back from peak, right? So I think I want to do this as well. IV and then peak price tracking. All right. So fixed before, after, conservative. All right. Yeah, let me rerun it and then. So I love when you listen. I love when you listen. See how quick that was? See how quick that was? I love it. All right, let's update CSV to reflect V2 before we run it. I don't need you, so I can put you in the trash. And then we have our clean QQQ code. V2 sniper. I'm on it. I'm on it. I'm on it. I'm on it. Do do do. 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 Do do. Do do. Do do. Do do. All right, we're running our back test again. This is version 2 of our back test. Remember the version 1. I'm just going to put it here because you saw what I saw. Version 1, we hit. I'm just going to put 149. Version 1. We hit approximately 149K starting from 100. I know. Shocking. Doo doo. Do-do-do, 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 shocked face emoji. Do-do-do, 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 do-do. I didn't want that one, but I know. All right, now we are let me get the V2. V2 back test results. Let me get the version 2 and let me see what it's screaming. And remember, the first couple of minutes is loading the data. So again, you try to do something 23 million times and tell me how long that takes you. This is, we have to be respectful. It's loading the data. It takes about 10 to 15 minutes, right? 5 minutes to be able to load it, if that. Now we're running our back test. And let's see what we're screaming. And then I'm going to run it. Oh, let me denote that this is 2024. Ran on 2024 data. 2024 data. Data. So I just seen the account go from like 700 to 140. What are you going to do in that instance, right? Like, are you going to allow the emotions to creep in, or are you going to take, okay, we back tested this. We've been through the grind. We've been through the mud with this. Like, I know that there's going to be ups and downs, right? I know that there's going to be ebbs and flows. So don't allow your emotions to creep in, bro. Like, allow what the work that you've done to be able to like prove its point, So I'm going to let this backtest run, and then let's see the results that it produces. If you all do have any questions in the interim, and it looks like it's about to rock. It looks like it's about to shoot off to the moon. Do-do, 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 do-do. If you do have any, oh, you know what? I was supposed to hold on. I was supposed to I was supposed to I was supposed to we're at 1800, and I think, hold on. Do-do, 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 do-do. We're at 2200. We at 2200. Oh. Do-do, 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 do-do. We're at 6,000. And we are in May. Just crossed 7,000. I used to do this new highs. Right, we just lost at $900. I just lost that's 1,800 in 2 trades. Damn near 2,000 in 2 trades. We're in May 22nd. Just made 1,600. So I guess we just made it back, but that's still crazy. That's still crazy. We just made $4,000 on one trade. We just made $4,000 off one trade, and I want to look at that. So let's look at this trade. The account balance at the time was 11,000. We are in preservation mode. Remember, we were anything above 1,000. We're in present. Just cross 29,000, bro. All right, let's continue this while we just gonna let this back test go crazy. Man, if you hear live, you're getting some great stuff, man. You're getting some great stuff that usually people don't show what I'm showing, right? Usually people want to be able to gatekeep what I'm showing, but I'm showing y'all my entire process. How I went from the idea, germinating the idea, how I went from being able to suss out the idea. Now we're back testing it. It made 7 grand in one trade. All right, I want to look at that one too. Um, wait, where is it? Where is it? Where is it? Where? All right. Let me just stay on. All right. The account balance at the time was 11,000. We're in preservation mode, meaning that we're only going to use 30% of the account balance in order to risk for trade, right? So we can use for $3,379.76. We bought a put, and this put was a strike price of 450, right? The delta, remember, puts are negative delta, but that still doesn't take away for of how we're going to do it, right? So the delta was 24.9, meaning that there's a 25% chance to round it up because of the 9. There's a 25% chance that the strategy was going to expire in the money, right? Or expire being worth something, right? We got in at $50, right? And this is our TP levels, right? Our take profit levels. Remember TP2, we're looking at 100 and 140%, 70%, and then after 15 minutes, I'm out no matter what. And then stop loss is 35%, right? So the cost of the contract was 50. We bought 67 contracts, which is crazy. Total cost was $3,350 and 333.50, right? Just under our what we have allotted, right? Our remaining cash is 7,900. So what happened is that we hit TP1 level in 9 minutes and we made $4,000, right? So it cost us 3, but we made 4. That ain't bad. We got 65,000. So our new balance is $15,508.92, right? It took us 9 minutes to be able to get to our take profit 1 level, right? 954 crib. And we're out. I love this for us. This is crazy. This is crazy. And you see, I fixed what I needed to fix, and the strategy is still going crazy, right? And again, just made $7,000. Give me that trade. Where is that trade? Here it is. I want to look at this trade. Let's look at this trade. Backtest at right now is at 107,000. You saw we fixed what we had, and we just made 8 grand. All right, let's stay focused. So the strategy balance at the time was $73,585.80. The risk tier, right, was 30%. So we can only use up to 30%. That's crazy. To use 22,000 on one strategy. But again, I'm going to fix this because in the real world, I don't know if I'll do that. But hey, if it starts at 100 and is able to get to 73K, oh no. Oh no. And this was a put contract, right? So we bought a 46 put. The probability of profit was 23%, right? And we bought it at $76, right? And this is our take profit, just like last time. The cost of it, we bought 76. We bought 100 contracts, and again, I'm probably going to limit that because that's crazy. So $7,600, right? We risked, right? In order to do this, 10% of the account. We had 65,000 left, right? So we hit in 9 minutes. We hit TP1, take profit 1, 70%. So we made 70%, and I was like, all right, get out. 102%, right? Then we got out. We got out. We sold it for $7,700 and $32.92, right? So in 9 minutes, we were able to make 200%, right? And then we made 7 grand in 9 minutes. Legal. It's not bad, man. All right, let's look at our new metrics. Our win rate dropped a little bit. Our Sharp ratio dropped a little bit. We are trading the same amount, right? Our total amount dropped a little bit, but that's fine. All right, now let's review. Review results. And let's discuss. Well, let's see what you screaming. What you doing? Oh, I'm not gonna hold you. Tomorrow I'm gonna be on Twitch. That's fine. Tomorrow I'm on Twitch. So, but I'm going to upload the video here, so that's fine. So y'all still going to see it, but tomorrow I still got to give my Twitch people some love. And I'm usually over there every day, but I just found out cuz I thought YouTube was going to be a bit of a hassle to stream, but yo, it's been lovely, fam. Say lovely to be able to do this. So, I appreciate those of you that have stopped by, to be able to fuck with the channel. If you do have any questions, I am here to help. I've been trying to get this QQQ strategy created for a minute, so I'm glad that we've actually created it, and I'm glad that it is ready to go. Practically, it's almost we're still back testing. There's still a couple things that we need to tune and like get better, right? Like it ain't ready to go, but it's about to be ready to go. I told you win rate dropped. And a couple other things dropped, but that's it. Before I tune it, and again, there's a couple other things that I still want to do. I still may want to add this IV filter, right? Implied volatility filter, right? You're loading implied volatility, but not using it for filtering. Consider adding IV rank condition for peak price tracking, right? And then peak price tracking. And thinking about this as well. I don't see what you screaming. I don't see what you doing. We found a strategy that is able That's a crazy though. Like buying 100 contracts. That means you just bought, what is that? 1,000 shares? 110,000 shares? That's 10,000 shares you just bought. It's crazy. Um. All right. Let's see. Bid as 36. So I mean, still over 100,000, bro. 52. The profit factor dropped a little bit. The ROI dropped a little bit. Damn. You got worse. The drawdown got worse. Sharp got worse. TP. Okay. Lost three profitable exits, TP1 and TP2, that became time stop losses. 7 more time stop losses, harder to escape time stop with the bid pricing. Spread cost per exit adds up across 238 trades. Right. Okay. Yeah, this 80 for this it's like crazy. Starting at $100, your nerves of steel. Starting at $100, you need nerves of steel, right? One bad streak equals a potential account being blown up. High risk, high reward strategy. Trade off lost 24% return versus V2, but gained real world validity. Next, let's run it on 23. Let's run it on 23 before we begin tuning and looking into why stop loss and other areas. All right, let's get our V2 in its folder. Um, all right, let's do the same for 2024 V2. I'll run it, but I appreciate you. Let me keep that open so we can have a reference. Python. All right, you're just gonna have to bear with me as we load the data. Data. Hold on, as a data load. All right, so we're running our back test. Again, you are seeing real results. And you saw how last time we had enough for the contract. Now we don't. That's okay, right? This is realistic. I want us to be able to see how well is it going to survive? Is it going to survive? That's all right. I kind of like this. I'm not going to hold you because it shows me that this strategy is market regime specific, and that's okay. What we're also going to create is a um, mean reversion side of this strategy so we can see that part. So I'm going to let this back test run. Let's see if it can survive. Look at that, it's finding trades. But is it able to make money from them? That is the question. And this is good. I mean, we have diametrically different strategies right now. Diametrically different results, right? We have one, they just couldn't stop printing money. We have another one that is struggling to get there. And that's okay. That is okay. Let me see if I can know if I can't put eyeballs on it. What's 80? 45, 11 times 0.8 is $36. How are you saying that I have? I don't understand this. We just got in another trade, but it didn't perform so well. It was a put. It cost us 11. We got out. We lost $4. So let's see. But I think the calculations are off because 40, 61, 40, 40, 61. 80% of 40, 61 is $32. But it's saying we have 16. So something is off. Or maybe it hit the cold, but I didn't introduce the cold streak, hot streak. So it's acting like it's okay. What's 1624? 1624 divided by 4061. That's crazy. Or is it the other way? 4061. No. That's damn near 10, 12, 15%. That's a lot less. That's a lot less. Well, this is good, man. Y'all get to see two different results from the strategy. So it's just not shits and giggles, fam. Like you're actually seeing it, fam. You're actually seeing it, fam. Boom, 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 boom. We're just waiting on the back test to finish, and once the back test finish, we're going to take a deep look into why this worked, why the other one worked, and why 24 worked and 23 didn't, right? And doing this objectively. Like this is going to reveal a lot of insights for us to be able to learn from, right? So this is good. This is good, y'all, that we're going through this. Dum, 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 dum. Dum, 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 dum. I ain't gonna hold you. Like, I'm kind of glad that this happened because now we can really, really get to the crux of it and figure out like what is diametrically different, right, between the 2 years, you know, because I kind of would have had my little left eye up if we just hit one, we lost $67. That's what I'm saying. I think we hit the cold streak. I'm not gonna hold you. I think we hit the cold streak. I think the cold streak is like 40%. That looks like 40%. So 30, 39, 94 times 40 times 40%. That is 40%. So we hit the cold streak. So I didn't know Cold Streak Hot Streak is in here, but it is. Cold Streak Hot Streak is saying that if you lose within 5 trades, if you lose 2 within 5 trades, I drop your the percentage down available from 80% to 40%, and you have to win in order to get that back. So you see we peaked at 197. We had 14 trades, and the final balance is 30.94. So let's figure out what happened here. All right. Review and let's figure out what happened here. Dum 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 dum. Boom, 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 boom. I don't know why this song is stuck in my head, but it is. So y'all just gonna have to deal with it, okay? Hypothesis, the VXN. That's too. Wait, what? Oh, the VXN may have been. Oh, because 2023 was a bit more volatile. So we probably need to get the VXN from like 35, 33 to maybe 38, 40. But that's a little bit too much. That's a huge ass range, bruh. Boom, 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 boom. If you could tell me what movie that's from, um, I'm gonna give you a high five. You can tell me boom, 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 boom. Tell me what movie that's from, and I'll code you a stock screener. I'll make you a free stock screener. That is legit, right? You tell me what movie. Boom, 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 boom. Boom, 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 boom. You tell me what movie that's from, and I will code you a stock screener that you can use daily, right? Let me show you one. Oh, the market's closed, so I can't even show you. Never mind. But I'll show y'all tomorrow. Or there's another stream I think that had the data stream on there, but again, the market's closed, so I can't really show its efficacy. Shit, I can even create one for Bitcoin, so I'm nice. Boom, 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 boom. We are waiting for the results from our backtest. And we just ran it on 2020. Oh, okay. If you want, I can illustrate an example of potential profit and losses in 15 minutes so you can make the shock face more tangible. Do you want me to do that? Bitch. Boom, 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 boom. The problem trades 238 versus 40. Final balance, account blown. The filter is not the issue. The root issue is 8 trades, no trades, no trades, no trades. The issue is the combination of the filter. The strategy requires all conditions simultaneously, always passing. 1492 available. The options available at the exact timestamp of the breakout plus the matching strike distance. Hypothesis: the function is failing because at the breakout timestamp is looking for the option that matches the timestamp. Exact match is required. Strike spacing issue 2023 QQQ prices was 260 between 239. Many have different strike spacing than 2024. The timestamp misalignment option quote may not update every minute in 2023. Liquidity filtering is too strict, eliminating too many options. We need to check the actual trades, why the 14 worked and 224. log. Okay. Okay. Let's investigate and check if this is an issue. If so, advise a more robust solution that will not cause issues across years. Boom, 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 boom. My hypothesis. I kind of want to go grab lunch and be back in a little bit. I'm not gonna hold y'all. We've been going like 3 hours strong. Um, how would y'all feel? I'm gonna go grab lunch and I'll be back maybe in 2 hours. If not 2 hours today, then 2 hours someday. That is shite. Boom, 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 boom. All right. Uh, Again, this is just stuck in my head. Y'all just gonna have to deal with it. Hmm. Hmm. Timestamp alignment test. Timestamp alignment test. Boom, 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 boom. Hey, hear me, bruh, bruh, bruh. All right, man. This thing is taking a little bit longer to be able to output than I expected. I'm trying to push through where we can get through this, right? All right, here we go. Almost been going for like 3 hours. I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. Said I'm a code. We ran 3 back tests, two of them on 2024, one of them on 2023. I'm trying to figure out if there is a timestamp alignment issue because it seems that there may be. And I want to be able to get a more robust solution that works across years. This was an issue previously, but it seems that it is now. So I'm waiting to be able to ensure that we can get this done, fam. I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. Deep investigation. Why no trades in 2023? I mean, there were trades. It was just shite. We're checking. Oh my goodness. This is like one of the longest outputs that I've seen. I mean, while we're waiting, do we have any questions from the audience? If there is, just let me know. We are here to be able to answer them as best as possible. So, a bit more about my journey. I've been trading, I want to say, since 20. Nope. That's a weird thing. Like, you start doing the 2020, right? Or 20, whatever, I think after 2010. But, like, anything less than that, you can. All right. Like, realistically, like, probably trading since like 17, 16, 2017, 2016. But like it was more so institutional in trading in the sense of like I would help. It was more so institutional trading. That's all the fucking. It was institutional trading, right? More so institutional and retail trading. It wasn't individual as it is right now. But as I've grown, like I've learned a lot more from being able to work with fund managers, hedge fund managers, right? I worked with a few quants before, but like they're super weird. In the sense of being able to share like how to be a quant. But I guess that's most coders are weird. Um, but nonetheless, I'm just vamping right now, just waiting for this back test to finish. I guess that's what happens when you're like 2.5 hours in. That doesn't take away from the great work that we've done. We've done fantastic work. It's just the fact that like I haven't seen why this shit is taking damn near 3.5, almost 5 minutes to be able to output and tell me what is going on and be able to provide a robust solution. Watch is going to give an update later today or tomorrow. Oh, guess what we just fixed? I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. Excuse me. Action required. I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. I'm a coder, I'm a coder, I'm a code. Bro, this better be the most informative. Oh, my fault, y'all. I thought that was helping, but it's really not. I'm a coder, I'm a coder, I'm a code. All right, y'all, hold on. Looking at the logs, I can see that the backtest did run through 250 days in 2023, but only found 14 valid entry opportunities. The log shows that each trade entry and exit doesn't log the days, where those trades were found. Root issue. Looking at the logs, the actual trade. Let me check the actual issue by looking at a sample day of what had signals. The code prints no valid entries found, but appears in the 2023 logs. It appears that it's only capturing the trades, not the failed days. The actual problem is the combination of filters together is too restrictive for 2023. Um, okay, the real issue, I don't think so. Is passing 14 times in 2023 and 20. Okay, this suggests that 23 market conditions is less volatile, tighter regimes. Allow a 1 minute tolerance. Okay, then pick the closest timestamp. Should I implement this? Instead of using the exact matching timestamp, use the nearest with a tolerance. I really don't understand this right now, and I think it's because I am a bit deprived. So what I'm going to do is we're going to go grab some food. Then I'm going to come back and we're going to figure out this issue. I won't work on it. I'll wait until I'm back on later to be able to figure this out. I want to try. I'm gonna try. If I do work on it, just forgive me. But I'll figure this issue out, and then we will continue our work right to this strategy. So you all have seen the process, and it's been great that you all were able to see it. Now I'm going to go take a break, and then we're going to be back with our stream a little bit later. It's your boy Creative. We'll be back.